Hi everyone, so let's now focus on the supply curve of labour for imperfectly competitive labour markets. These imperfectly competitive labour markets will be monopolies and oligopolies. They will be dominant, wide-scale employers of particular types of labour in an area. Okay, a great example of a so-called monopsonist, that is a sole buyer of labour. Okay, monopsonists represent a sole buyer of labour in an industry. Great example here is, of course, the NHS. They are regarded as a monopsonist employer of healthcare professionals, nurses, doctors, and so on. Okay, so what does this mean? Well, it means that therefore the supply curve of labour for the firm will be the supply curve of labour for the industry. Okay, so just as we saw within monopoly diagrams when it came to the theory of the firm unit, we saw that the actual upward sloping part of the marginal cost curve would be the supply curve for the industry. Again, here we are dealing with one firm equaling the market as a whole. So it's important to remember that as a distinction from what we saw in the previous lesson in perfectly competitive labour markets, where you have a separation between the firm's elastic supply curve of labour and the industry's upward sloping supply curve of labour. Anyway, let's focus in on the reasons for this and how this would actually look. We've got a simplified table here. Now, in reality, of course, labour wouldn't be employed as 1, 2, 3, etc. in this market. It would be perhaps 1,000, 2,000, 3,000. But this just gives us a nice straightforward example to understand exactly why the supply and marginal cost curves look as they do. Okay, so based upon this, we can see that for each additional employee, they've got a labour cost, a cost per unit of labour here of £10 initially. So that first labourer has a reservation wage, that is the minimum that they are prepared to actually work for, of £10. Our next employee has a reservation wage of £20 though. So what does this mean? Well, it means because of legislation like the Equal Pay Act and the fact that you should not be paying different workers different levels, then it means that the actual total cost for the industry will actually rise. Instead of being £10, it will now be £40. Okay, so we've simply got two lots of £20 there to work that out. But our third worker, they have a reservation wage of £30. So having a reservation wage of £30 means that everyone ends up getting paid that £30 to ensure, again, that you have that consistency across the market and everyone knows that they're getting paid the same amount for the same job. So therefore, we've got £90 as the total cost. Our fourth employee, well, their reservation wage is £40, so total costs jump again. And finally, our fifth labourer is not prepared to actually work unless they get paid £50, so therefore total costs jump again to £250. So if we just run through and work out the marginal cost, now strictly speaking, of course, the marginal cost should be put in the margin between the figures here. Let's just run through each of these. So from 10 to 40, we see a marginal cost there of £30. From 40 through to 90, we see a marginal cost there taking place of £50. From 92 to 160, we see a jump of £70 in the change in the total cost, and finally we've got a change of £90 there. Okay, so I've indicated the actual industry supply curve here, but what's interesting about this, and the supply curve just goes as so for each of these labour levels that we've actually achieved here. But what's really particularly notable about this, when you contrast this with the firm in a perfectly competitive labour market, is how the actual costs of labour differ from the marginal costs. Okay, so that's a really important point to be aware of, and we can actually draw those in, which would look something to that sort of effect there. So there is our marginal cost. Now, why does this deviation happened between the supply curve and the marginal cost curve? Well, it comes back to the fact that this is an upward sloping supply curve, and it means to employ additional employees, you need to pay them higher amounts because different employees have different reservation wages in essence. Okay, so that really is the notion of this. We see big differences here, and this has profound implications when it actually comes to wage determination, as we'll see in our next lesson. Okay, all right, thanks guys.